Well, Janet Yellen's words, quote unquote, would likely be appropriate are still ringing in my ears. Can you recall another time in your career, or perhaps even stretching back further than that, when a Fed chairman was that explicit about a coming rate move?
No, perhaps during the days in which lower interest rates were required and quickly, during the Bernanke period, perhaps in terms of lowering interest rates, but not in terms of raising interest rates. I think it's a slam dunk. There's no doubt that the Fed's going to raise interest rates. It's in the market, and stocks are doing well, which is a significant indicator for them. So I think they'll raise interest rates. What they do going forward is dependent upon economic growth and yes, the strength of the dollar. They don't want the dollar to strengthen too much, or else it presents problems for the global economy.
Well, at the moment, futures tell us that the Fed will raise rates again in June and again in December. What do you expect?
Well, that's the key. So two more interest rate hikes after this one, that would be 3 for the year, and it approaches 2%. I think the Fed believes that the neutral interest rate in nominal terms is around 2%, Eric, and that suggests that if inflation is 2%, that real interest rates, real short-term interest rates, should be close to zero in its neutral state. And certainly the economy today, inflation today, is perhaps a little above neutral in terms of its heat. And so, yeah, I think 3 interest rate hikes during this particular year is what we should expect, absent some significant global event that we've talked about.